I'm Chris Preston.
I'm Brad Simmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network, which has been in business for more than 50 years. Brad, we're finally past the election. Thank God. How late did you stay up? Or we're not going to get into, the politics of it all. How late did you what? Were you glued?
Yeah,
Yeah.
we had it
Good
on.
for you. And well, you're only 2 hours behind now, right?
Yeah, I'm 2 hours
Um,
behind now.
yeah.
I was up until about midnight. I wanted to see like the Pennsylvania results come
Midnight
in,
your
and
time. Oh, wow.
yeah, midnight my time. So I wanted to see the Pennsylvania results come in. And then there was a spokesperson for Harris that came out and said she wouldn't be offering a speech. And I tried initially to stay up to see what Trump's acceptance speech, President-elect Trump's acceptance speech would be, and there was some delays in him getting to
Was it
the
like
to the
3 in the
watch party.
morning Eastern time or something like that? Or
Yeah, I would have had to be up to like 1 in the morning, and
yeah.
it's like, all right, I can read the headlines. I know
Yeah.
which way the wind is blowing. So
I was up to midnight Vermont time.
what?
So yeah, you were well, yeah, I went to bed. I think only North Carolina and Georgia had been decided, but it was pretty clear where it was going. So
Okay.
that
That's what I was curious because I the timeline is still a little bit foggy for me what you would have seen because like Pennsylvania hadn't really been called yet.
yeah.
So I was curious if you had
It
stuck
was
it out,
clear
but
though, they're breaking down how
yeah.
he was or no, she was performing versus Biden in 2020 in Pennsylvania and in Wisconsin. It was pretty clear that um it was going to Trump. So anyway, that's enough politics. Let's move on to our investing podcast today. What's on tap for today?
So today we are going to talk about the market's reaction to the election. It has been good so far. Get a better sense of what that might mean for the next few months into the next year, maybe. We are going to talk about the latest Fed meeting, which was yesterday. Fed cut rates again. We are also going to talk about Nvidia being added to the Dow. It's a recognition for most important company in the world, arguably right now. And then we're going to be joined by Mike Cintolo of Cabot Growth Investor and Cabot Top 10 Trader to talk about what he's seeing in the market these days. But before we get into all of that, as always, Chris, we are defending the hottest takes we can think of, and you are up this week. Your take to defend the 2.5 months between now and the inauguration are the best time to buy stocks in the next year. You have 90 seconds. You may begin.
Okay, so let's get into some data from the last three elections, uh, or sorry, the 2.5 months between the last three elections, presidential elections, and the inauguration date. So 2020, Biden wins, stocks up 14.3% between election day and inauguration day, 2.5 months later. Rest of the year after that, up 21%. So, I mean, there's still it was a very good year for the market, as we know. But on a per month basis, those first 2.5 months before he was inaugurated were the best. 2016, Trump wins his first term, 6.5% up between being elected and inaugurated. Rest of the year, 14.2%. So again, per month basis, those first 2.5 months were the best. Even going all the way back to 2012, Obama's second term, 3.7% up between election and inauguration, 19% the rest of the year. That one's way less pronounced. That was more just average, but on average, 8.2% is the average gain between election and inauguration, just 2.5 months. So it's a good time to invest. I think the theoretical of what what a presidency could be is often better than the reality of it. At least, to investors.
All right, good time. Hit the post on that one.
Great. I knew I was bumping up against it.
Yeah, yeah. Like we have talked about, I don't know, for the better part of a year, tons of cash on the sideline. Um, the day after the election, there were, I'm going to misremember the numbers, something like $40 billion worth of inflows to index ETFs
Hmm.
compared to 4 billion immediately after Biden was elected, like the day after Biden was
Yep.
elected. It's a it's a massive amount of money that's now flowing into the market. Um, Obviously, the market is higher now. It's been higher every day since the election. Small caps appear to be breaking out, and I'm sure we'll probably get into that a little bit with Mike. I
Yeah,
think
this
he
might just
mentioned that
flow
one.
right into our first big three item.
Um, but yeah, I mean, low taxes, lower regulations, it's all things that the market likes. I think there was a something like an 11% bump to corporate earnings after Trump's first round of corporate tax cuts, and now there's speculation that the corporate rate could come from 21.5 down to 15%, or I'm sorry, 21% down to 15%, which would immediately flow through to the bottom lines. That kind of earnings gain also sort of fixes a lot of overvaluation because it pulls down PE multiples, right, from a valuation standpoint.
Yep.
Um, I don't, the market's a freight train right now. And I don't see anything derailing it, certainly before next calendar year. Like,
Yeah,
what's the catalyst out there that stops it or slows it down? I don't see one.
I know. And we've been pointing to this. Like, I think regardless of who won, stocks would have been up. So we've gone into our first big three item here. Eh, the pattern has been the last few elections. Again, different winner until now. Different winner each time. Biden, Trump, Obama. The pattern has been sort of exuberance. Right after the election is over, because the market just wants an answer. Um, and we're seeing that again. Now, I think it's definitely is remembering that during Trump's presidency, stocks were up. They were up, not only up, but up a lot. They're up 63%, which if you extrapolate it, if he replicates that this time, that would make the return under his 8 years the fourth best since World War II. Trailing, it would be 126%. Now, you can't just say
Sure.
he's gonna repeat the same returns, but the best returns, 8 year returns were under Clinton, 210%, Obama 189, Eisenhower on 29, and then if you double his 63%, it would be 126. He'd be fourth, just ahead of Reagan. So market, sees that, remembers that Trump was good for stocks. Now, the irony is Biden was up in the low 50% range during his 4 years. The next 2.5 months count towards his record, so he may match the Trump presidency, in part, at least at the very tail end, because of Trump's election. Let's sort of get into how much of this do you think is it's clear some of this is a reaction to Trump specifically winning, but do you think the quick answer nature of the election helped also?
Um, I do insofar as there's not really a risk of a more restrictive regulatory environment or like, antitrust. I think we have talked about on this podcast before, right? Like Lena Khan with the FTC was ramping up antitrust enforcement. Google was just deemed a monopoly, and the DOJ asked for them to be split up. I don't expect that to be the case going forward. I think that the DOJ will probably be instructed to settle with Google. Um, Bank regulations are probably not going to be nearly as stringent. They're going to be able to lend more. Bank reserve requirements are probably going to remain lower. Um, like all of these sort of marginal costs that really add up in a high regulation regime are going to get tamped down. I think that's sort of a sustainable bump for stocks. Tax cuts, immediate bump. I mean, like long term, the tariff thing is, or without having concrete proposals in front of us, it's hard to sort of game a lot of this stuff out. But if we do end up seeing aggressive tariffs, that's probably bad for net importers, companies that rely a lot on foreign inputs. So I think some of it is the immediate relief, but I think the lion's share of it is that this is a better environment for
Yeah.
equities, big cap equities.
Yeah. banks, we're seeing some
Banks,
big
definitely, yeah.
bumps. Small caps, I think small caps, we've talked for months about it. They're due. Once the Fed starts cutting rates, which we saw a little bit, but then, rates are still high. The double whammy of, we're about to get to the Fed, of, this week, not only Trump winning the presidency quickly, but also the Fed cutting rates again is really bullish for small caps because, Trump's having an America first candidate in the presidency for companies that primarily do their business in America is good for small cap stocks. Um,
We're also likely to face higher inflation than we've had in. I mean, like I can't say higher inflation than we've had in the last couple of years because obviously the first 3 years of Biden's presidency we were ravaged by inflation, but higher than we've had in the last few months now that we're back down to the 2% range. Just based on what ended up happening to the deficit and how spending sort of played out in Trump's first term. If we've got a lot of tax cuts, but not commensurate cuts in benefits or spending or anything along those lines, that's going to have an inflationary effect on the economy broadly. So you would expect that some of that will also contribute to outsized equity returns, returns on hard assets, things
yeah.
like that. Um, you know, again, we're sort of speculating before we see any like
Yeah,
the
this is a
the
buy
ballots
the
aren't
rumor,
even
sell the
settled yet.
news. I mean, maybe not sell the news, but there's a buy the rumor thing happening here, and not just exclusive to Trump. Like I said, 14% up in the 2.5 months between Biden being elected and inaugurated.
I mean,
Um,
like the S&P is on the verge of breaking 6,000 if it hasn't already. I haven't. Let me see where it is right now.
yeah, uh,
Uh,
close. Yeah,
59.95,
very close.
right?
Maybe it'll
So it,
happen
it
while
is
we're
knocking on
talking.
the door of 6,000. The Nasdaq is right on the steps of 20,000, right? Like
Yeah,
all more money to companies, lower taxes, little bit more inflation are good for asset values.
yeah,
Stocks are there is more juice to squeeze in this rally, I think.
yeah. I mean, we've been saying that the record, what, uh, how much? It's something $1 trillion on the sidelines in
It
money
was
market
six and a half
funds.
ish.
6.5ish. Yeah, saying that eventually that's going to get deployed, and we're starting to see it now. And I'm sure a lot of people are waiting for the after the election, um, and also Fed cutting rates. And so let's get to that. Fed cut rates as expected, another 25 basis points yesterday. Not really major takeaways, other than you highlighted that Powell did say, something about we could pivot and raise rates again if inflation spiked again, but that was pretty vague, right?
Yeah, he was asked whether the possibility of rate hikes were in the future, and he essentially said, we can't eliminate that as a possibility, but
Right.
we're also not going to speculate on something that could be a year out. And that I think is because the people that were covering Powell, that were asking the questions of him, are seeing the same thing that we're seeing, which is it's probably more of an inflationary environment now. The bond market has been pricing that in a little bit. We've seen the rates on the 10-year and the longer tail of the yield curve rise.
Yeah.
Um, and that gets back to that cash on the sidelines. Like if we're seeing more inflation and rates are going to come up, that means take some money out of longer duration fixed income. Um, Cash becomes less valuable if we are seeing maybe more persist. And I'm not saying hyperinflation or 7% inflation, but maybe we get back to the 3 or the 3.5% range or something, where it's just a persistent higher level of inflation that over the long haul devalues cash a little bit and it makes some fixed income assets less attractive. So it does sort of force investors' hands in getting some of that cash off the sideline, in addition to motivating them to get cash off the sideline because of all the things that we've talked about thus far, where equities are really responding positively to what we've seen in the last couple of days.
Yeah, and there's another rate cut, or sorry, another Fed meeting coming in December 18th. FedWatch tool currently has 68% chance of them cutting by 25 basis points, 32% chance of no cut. So we'll see what happens there and how that evolves over time. My guess is they would cut another 25 basis points, but that'll probably depend on data in the next
Yeah,
month or so. But
they gave more credit to the hurricane and then to strikes for some of the weakness that we've seen in the jobs numbers. Because last month was a net addition of 12,000 jobs, right? Like that was a potentially spooky number. The Fed
yeah,
pretty much hand waved that away and
right.
made it clear that that's not something that they see as concerning. They've got enough of an explanation from other slowdowns in the economy. So yeah, I don't I mean, like barring mass layoffs or something, I don't see any compelling reason for them to cut by more than 25 basis points.
No,
And
and there's 0% chance of that right now. There's, a third of people think the chance they do no cuts in December. So,
this year
uh,
they've also been vocal about not wanting to signal anything to the equity markets. I mean, Fed Powell has talked about the market taking cues from the language in the releases, from the tie he's wearing, stuff like that, where like, they're sensitive to remaining apolitical. That's no longer a risk. The market rally is not based on anything the Fed has done. If and I'm assuming that it will, if the market continues rallying through December, it's not going to be because or in spite of the Fed. They can remain apolitical, so they can just sort of cut with abandon. They can continue to just follow whatever their numbers and whatever their models are telling them to do, so they can
yeah,
take a step out of the spotlight, which I, I have no reason to think that they don't cut 25 basis points next meeting
yeah,
in December either.
yeah. I would guess that they will. Okay, moving on. Last item in our big three. Nvidia has joined the Dow as of today. Um, I we talked about this when Amazon was added, what, a little over a year ago, maybe
Well,
about
it
a year
was
ago.
no,
To
I think it was
now,
earlier this year, right?
was it this year? Maybe it was. Um, is it better for Amazon or the Dow? My answer was the Dow. Same case here, and sure enough, I mean, literally, we're like a couple hours in, Nvidia's down 1.2% today. Um, so the Dow now has Amazon, Nvidia, Microsoft, Apple. So four of the Mag 7. Is this just becoming a smaller NASDAQ?
It's
Is the Dow going to become, I guess this it's on its way to making the Dow more like the S&P, more like the NASDAQ, where it's heavily weighted to a handful of companies.
Yeah, I mean, like at this point, it's going to be the Dow 7 or the Dow 8. It's just going to be the Mag 7,
Right.
with whatever residual companies just happen to still be in there.
Yeah.
Um,
Intel is
you
the
know,
company is the stock that got the boot, by the way, to make room for Nvidia.
yeah, as it should. We're like
Yeah,
we're
it
talking
should.
about or people are talking about bailout possibilities for Intel, or maybe chunks get sold off, or it gets sold off wholesale to some competitor because they're losing a fortune making chips. It's like it's not representative of the economy, and the Dow is a very discretionary index, which is why there's not really much money tied to the Dow. The DIA is the largest fund, and it's I think $30 billion or so. I didn't pull that, and I probably should have, but it's a relatively small amount of money. Most assets are not indexed to that; they're indexed to the S&P and the Nasdaq. The Dow is sort of a vanity index,
Yeah.
but it will move more in lockstep with big tech. Um, I'll pitch this to you: Tesla to replace somebody in the Dow. I have one in mind. If you'd like, I can just volunteer that.
Yeah. Dylan, what do you think it'll play? I could see it
Boeing.
happening, but who?
Boeing.
Oh, yeah.
If the Dow is leaning into the Mag 7 thing, which by all accounts it is, and it's more representative of where the money in the market is, um, I think Tesla is the next Dow edition, and I think Boeing is the most reasonable replacement. Um,
They should do it now. Strike while the iron's cold.
well,
With
so
Boeing, that is. Yeah.
yeah, Tesla is a major U.S. supplier, just like Boeing is, right? Like they're responsible for 99% of the volume of assets that get sent into space. So the mass that gets lifted into low Earth orbit, almost all of it is coming from SpaceX. It is a huge government contractor. It's a large domestic auto manufacturer that makes something like 86% of its inputs in the US. It is, as far as American car companies goes, it is the most American
Yeah.
for assembly and for inputs. Nobody, not Stellantis, who makes Chrysler, Jeep, Dodge, not Ford. There's nobody that's more of an American company than Tesla is. That is my pitch if the Dow continues to prioritize adding Mag 7 stocks, which is wild to me, but I can see it happening.
Yeah. It's funny. And you had another stat earlier. I think you mentioned off air. Is the average performance of a stock after it gets added to the Dow down 20% in the first year? Is that right?
Yes. Yeah. Once the company's added to the Dow, the average performance is a decline of 20% for the next year.
It's almost
Um,
like Dow's trying to become cool. It's like the old guy going through a midlife crisis, right? Like trying to become cool, and but in doing so looks less and less cool. Uh, and it's almost like there's a tax paid for joining that group. Yeah, I'm
yeah, it'd
not
be,
saying that even if Nvidia follows that pattern and it's down in the first year, I'm sure it'll still be a great stock for years to come. Um,
yeah,
but
I
it's
don't I
almost
don't
like
think
they're
Nvidia I
what's
don't
that?
think Nvidia plays out with that historical average,
No, 20%
given the
would be
environment right now.
surprising. Yeah,
But
no, I agree. But it's almost like
yeah,
it's where great stocks go to. It's a retirement home for great for
yeah,
great.
by the time they get around to it, it's too late. It'd be like if I started playing hacky sack to be cool, right? And it's like, yeah, that's not on trend anymore. You
Right.
just look old and embarrassing. Um,
Yeah. Yeah, if they really wanted to be cool, the Dow would go with, I don't even know what, get some crypto, get some Bitcoin in there or something. That would,
Add Coinbase.
yeah, right. Um, okay. So let's welcome in, we'll take a quick break and we'll welcome in our guest for the day, Mike Cintolo. All right, welcome on Mike Cintolo, Cabot's chief investment strategist, and chief analyst of Cabot Growth Investor, Cabot Top 10 Trader. Um, Mike, I mean, Mark, you've always been a savant in terms of market timing. Um, it seems like
Going on the resume, dude.
um, you were sort of like maybe you were a little bit in like wait and see mode or sort of like hold mode for me the last month. I think that's sort of fair, but the market was doing the same. Now now the election is over. Market has an answer by the time it woke up on Wednesday, and Trump, whose first term did what, the market did well. It liked all of it, and then also like the Fed cut. You're not big on the macro stuff, but just what are you seeing from the market now that you probably didn't see in the month pre-election?
Well, I mean, more strength. Yeah, the news itself and who won in Congress and the Fed, and of
Yeah.
course, what no one talks about is has been. I have to spend most of the weekend going through. I mean, I can't keep up with all the earnings reports. It seems like there's
Oh,
been a
yeah.
million this week.
Yeah.
But it's the reaction to the news, not the news, and the
Yeah.
reaction's obviously been very positive. It is going to be volatile, so you never know. Like, maybe some follow-on thing happens next week and market pulls back sharply, but I'm not anticipating that. I'm just saying you have to see how it plays out for a few days. But yeah, the major indexes were positive, not powerful for a while, like the NASDAQ, the
Mhm.
mid caps, the small caps. Never really got to new highs. And even the stuff that was strong pulled into the 50-day line before the election, which isn't abnormal. It's just kind of on the fence a little bit. So now that I'm not a big breakout guy in the indexes, but I kind of am now. So I'm
Yeah.
hoping I am now just because they kind of all are rushing higher. This year's been a lot of like the NASDAQ looks good, but it's mega caps and a lot of leaders don't. Or the leaders look good, the NASDAQ hasn't joined. Or like the S&P is strong, but small cap. Now it seems like everything's joining the party, which I think is, me, up is good. So I think that's a good thing. And the
Yeah.
leadership is just broadening by the day. Not that there's not potholes, there is, but cyclical stocks and just all sorts of stuff is going higher.
Do you have green lights across the board from some of the indicators that you follow? I think the last one I'd seen, I know the tides were looking good. 2 second indicator, I think had been going back and forth a little bit. Where are we at on all the indicators?
Yeah, so they're basically positive. 2 second had some, as interest rates have started to go up again, that tends to affect that indicator. So the last couple of days have been much better, so we'll see. But pretty much everything else, like the aggression index, which is just growth versus defense, accelerated higher. The trends are up, long term, intermediate term, and really this whole post August move, the key piece of evidence, in my opinion, has been leading stocks. It's just I can't. I wish I had a perfect one little chart to show everyone and say, look, the indicate it's positive, but just scanning doesn't, and owning obviously a lot of stocks, top 10 and growth investor, and studying them, there's just been a lot of strength and normal pull. When it does pull back or shake out, it's been normal for the most part. Again, earnings season, there's always going to be stuff that craps out, but for the most part, stuff looks great.
Yeah, it feels just at a high level, independent of the election or Fed rate cuts, it feels like similar to move to last November after a sort of a sluggish, well, last October was worse, where the market actually bottomed, but this October was sluggish. It feels like that kind of breakout, that kind of forceful breakout sort of across the board, right?
Right. It does feel like that. I would say there's more like there's some stocks that are going wild on the upside. Thankfully, we own some. I think they're back then, like the kickoff was basically Halloween. I mean, it was like, I don't
Yeah.
know what the hell it was, 28th of October or something, but it was
Right.
like that was like the initial like go time. Some of these things have been running intermediate term since, they broke out in September. I don't think that's too late intermediate term. I mean, it's 9 weeks maybe into the run, 10 weeks. But it's not like, the first week, but maybe for the indexes and maybe for some of these cyclical things. And financials, not exactly, but some of this stuff, maybe it is sort of
Yeah.
the first week or two of what could be a strong, 3 or 4 month run.
One spot where I think we're maybe starting to see that, and I'm curious what your take on it is, small caps, right? Chris and I have spent a lot of time talking about small caps, and they've always seemed like right on the cusp of finally having their moment, right? Underperforming or not outperforming in the way that they should be. Where are you at with that as a class?
Make it happen, Brad. I'm in.
Yeah. They're the Lucy pulling the football from Charlie Brown thing
I
over
know.
and over.
And it could happen again. I mean, if treasury rates go up or, whatever. But no, I dabbled there again this week, and if it starts to trend, it can go. Yeah, I just think it's a great. It's been 3 years, three. Yeah, it's been 3 years now.
Yeah.
Since they've gone anywhere net, and you just think with the Fed on your side, and I don't know, perception for the market as a whole doing well, and all that, stuff like that. So I think the stage is set both fundamentally and technically. And I'm not a big. I mean, I think you can do better in individual stocks, but sometimes these indexes have a either right off of a major low or something like this, where it seems like maybe, 2025. I think I've said this before. It wouldn't shock. I'm not predicting this at all, but it wouldn't shock me if next year was like the S&P 500's up, 6%. It's like, that's not that good. But like underneath the surface, maybe the broad market does,
Right.
15 or 20. I mean, I have no idea, but it wouldn't surprise me if we start to see some of that kick into gear at some point a couple times over the next couple of years.
Sorry, Brad, you had something?
Yeah, what sectors are you keeping an eye on into the end of the year? Or are there pockets of strength that you're seeing where it's like, hey, obviously you don't predict anything, but there's something that's drawing your attention right now?
Yeah, I don't have a great. I mean, it's just been so earnings season's been pretty hot and heavy here, especially this week. Kind of the usual suspects. I think we've talked about AI, like the chips. Chips actually do look like some of them could get going again, but I think that's much more selective because they've gone up a hell of a lot for a long time, 15 months into the July peak. So I think some of that money is starting to get into like I'm seeing strength in some of the other like newer quote unquote newer networking names, the Coherence and the Astera Labs, stuff like that. But just some newer name like a Reddit. I mean, it's very hot and heavy as we record this right now. I mean, it's sticking straight up in the air. But just some newer names like that from a variety of growth areas. I still would hope and maybe starting to see some of the medical stuff kick into gear. There's always a post-election wobble because it's like regulation or all that stuff, but
Yeah.
most of them look intact. Eli Lilly is topped, or at least for now, but a lot of other things look intact, and some of the growthier names seem to be picking up speed. So that's one I'm keeping an eye on.
Yeah, just looking at like you're good at looking sort of the big picture, especially in the bull market. We're 2 years in. You had been saying for a while that the next odds are the next big market move is up, and it seems like this could be the beginning of that. You know, I guess just talk about how people have been bull markets don't die of old age, right? And this isn't even technically old age. 2 years is on the lower end. The average is what, like 60 plus months or something for a bull market. I mean, there's every reason to believe that the next 12 months could be as good as the last 12 months, right?
Yeah, I don't know about like the major end, if again, maybe if the S&P is up a certain amount for 2 years in a row, the third year isn't as good. But I just think in
Right.
terms of what I do, which is looking for winners, leading stocks.
Yeah.
Yeah, I don't think growth stocks really kicked out until Halloween of last year. So to me, we're like a year into a move after 3 years of garbage,
Right.
topping out and bear market. And 2023 was okay, but there was until before that kickoff, it was kind of bottoming out. A lot of stuff went up, then came back down, that sort of thing. So no, I think it could be relatively early. You never know, I mean, but then the Fed's on your side and stuff. So something can always go wrong in the world. But I mean, just from a big picture perspective, no, I don't think I mean, and then the big picture sentiment, which is hard to define, but it's like, I'm sorry, but there's not, I mean, maybe it changes after this week or something because the election and the headlines and the Dow's up, whatever the hell it was, 1,500 points or whatever that day. But I'm not getting, I mean, no one in the neighborhood's like, oh, such and such stock or, Tesla, no one's
Right.
talking. I don't, I think that's,
Yeah.
I'm not saying it's 2008 right now, but I think it's mid range. Now, a
Yeah.
year from now, we have a strong year. A year from now, I'm on the podcast. Yeah, maybe by then it's kind of, you know, everyone's got, they're taking money out of their house and buying stocks with it or something like that. But right now, I still think it's relatively early, especially for growth, which really fell off a cliff there for, 3 years.
Yeah. No, you're right. I still not running into people on the local, well, in Vermont, of course, local country store would be where I run into people. But we're like, hey, what do you think of this stock or these stock? I'm not hearing that the way maybe I did in 2020, late 2021.
No, not at
Yeah.
all. I mean, the most I get is if I'm on a guy's weekend, someone's like, "Oh, what do you think of the market?" And it's like, "Oh, yeah,
Right.
it's pretty good." And then and then we pop open some bourbon or whatever, But
Right. There
so
you go.
no, it's not. I think it's still. I don't want to say like it's the first inning because it's not, but it's not. It doesn't feel like the ninth inning or anything.
Right.
Yeah.
Brad, any last questions for Mike?
Do you ever pay attention to the VIX at all? I know that's more Jacob's window. I'm just watching it fall off a cliff and seeing if there's anything sentiment wise or big picture wise that I'm missing.
Well, no, I follow it just to make fun of Jacob. No, I follow it. I think it was, there was a lot of hedging before the election, which I think is, from a market perspective, is a good thing. It just means there's money on the sideline. It's falling off a cliff. I know Jacob kind of looks at it. Most people use it as a contrary indicator. Jacob actually uses it, I think, as more of a straightforward thing, meaning low is good,
Yeah.
which kind of makes sense the more you think about it, because usually when the market's trending, it's lower. So anyway, I look at it. I'm not reading too much into it, but sure. I mean, again, it's a little hot. It's a little, you know, there's a few high fives this week. It's been a
Yeah.
good week. So it's like, I do think near term, sure, it wouldn't surprise me. I'm not saying things are going to fall 30%, but it wouldn't surprise me if there's some air pocket downgrades, rotation, whatever that makes it a little bit more uncomfortable. But overall, it's secondary. I think the primary evidence is, I mean, when these things are going up on huge volume, it tells you what the big investors are thinking.
Yeah, I like the market high fives as a just a mindset to have with it where it's like, hey, yeah, Okay. Well, no, this is maybe a little bit exuberant, but you can still win the game and give each other high fives. Right?
No, yeah. No, you have to enjoy it because there's a lot of it's a
Yeah,
grind. It can be a grind, but
yeah,
you gotta enjoy it. But no, it's a little like I don't know how to say it, but it's hot and heavy. I'm all for stocks going up 40% on earnings.
Yeah, I'll bet.
And I will say we've seen a lot. I mean, I do remember, not to go on tangent here, but it just there have been in the past sometimes where the market's kind of building steam. We hit earnings season, everyone's kind of nervous, and there'll be like a couple of days where things go nuts, and then we pull back. But I'll say like it's been kind of, I mean, obviously this week is unusual with the Fed and the election, but it's been like a couple of weeks now. Like Reddit was last week, and it was like, holy crap, and then it was like AppLovin and Axon and like Upstart and Toast. Well, Toast isn't that big, but it's like now it's like you see these stocks, they're up 10 or 15% on earnings. You're like, oh no, where's the big winners? So it's pretty
right.
extreme, which we'll see how it plays out. So short term, we'll see. Long term, I think strength is, up is good. So
Yeah. We'd be remiss if we let you go before talking about getting a chance to talk about your beloved Patriots. Where's your Drake May confidence level right now?
well, I'm wearing my Whoopi pajamas. No. I mean, he looks like he can play in the league. The team is terrible. Coaching, not the best. But but no, he doesn't look out of place. That was my fear, is kind of like he was supposed to be pretty raw. And it's not like it doesn't seem like they're running all, wide receiver screens or, just very, very basic college stuff. So he seems like he knows what he's doing. So yeah, no, I'm optimistic. I'm in on him, but I mean the team is just
This might be the
as
first
long as they're
time.
competitive. I just want competitive games. The last couple of weeks, I mean, of course they beat the Jets, which is amazing. The Jets are just such a joke.
Yeah,
But but like just to be competitive and be able to watch the game and be entertained as opposed to, oh, it's 30-10 or something like that. So,
yeah.
but I'm optimistic. He does look like he can play. All three of the rookies look like they can play. So.
This is probably the first time in the last 20 plus years, quarter century ever, that the three of us could have been on a talk and two of our teams are above 500 and yours is the one who isn't. Brad, I believe your Cardinals are above 500. Is that right?
They're number one in the NFC West at 5-4.
Are they really? Wow.
Yeah, and they've been losing to really good teams. I'm still not
Bills.
sold.
I lost to my Bills. We were
Yeah.
right. That first week, I think we said it after, like that was actually just a game between two good teams, and Bill shouldn't feel bad for you guys playing us close.
Yeah.
Yeah, and they got some defense. They got some help on defense with the pass rush, which has been lacking. I mean, their secondary is rough, but if they can't fix the secondary, you can fix the pass rush and get a little bit of help there. Um, I don't know. The NFC West is, I think, disappointing.
Right.
A lot of people, especially like Seahawks fans,
Yeah.
who had a solid year last year, and this year they've fallen kind of flat. But somebody's got to come out of there, and given the state of play, there's no reason it can't be the Cardinals.
Yeah, why not us? I think is the
Eh,
expression. Right?
somebody's got to get smoked by Atlanta in like the first round of the playoffs.
I don't know. We'll see. I hope they finish. I hope the Patriots finish the year strong. I'm all for the Cardinals, by the way. I'm all for like new blood. I'm kind of sick of. I can't do the Chiefs. I can't do them.
No, no,
Yeah.
and
I'm
that's
done. Like I'm glad Burrow. So last night I didn't watch the whole game, but this is Monday night football or no Thursday night football, right? So,
yep.
but Burrow looks like their Bengals, of course, play like garbage for a couple months, but he looks like they're back. Obviously, Lamar
Yep.
Jackson looks amazing. The Bills look pretty good. So I'm hoping somebody can finally take down the Chiefs.
Yeah,
The Patriots can just end the season decently. So it's like, okay, we're going up the ladder here as opposed to just bumping along the bottom.
yeah. Well, best of luck to Drake May and and at least until you play the Bills.
I was gonna say we got you guys. Yeah, yeah.
Yeah, but thanks for joining us and share your insights, and we'll talk to you later.
Have a good weekend, guys.
Yeah.
Yeah.
All right, thanks to Mike Cintolo for joining us. Always good insights from him. Before we go, just wanted to give a quick plug to my stock of the week investment advisory. We right now have an offer where it's 50% off the normal annual price. If you go to cabotwealth.com/street. So that's just for you guys listening to our podcast. If you go to cabotwealth.com/street, you get 50% off of my Cabot Stock of the Week service, which every week picks a new stock from among our other investment advisories. So they're sort of pre-approved or pre-stamp of approval from one of our other analysts, including Mike, who's just on here. It selects from his Cabot Growth Investor and Cabot Top 10 Trader newsletters, in addition to our dividend newsletter, our small cap newsletter, and our value newsletters, even our cannabis newsletter at times. And you get a weekly stock pick. I have a portfolio now of 26 stocks. And if you try it out for 30 days and don't like it, you get 100% money back guarantee. So again, go to cabotwealth.com/street and get 50% off annual price to my Cabot Stock of the Week service. Brad, any closing words before we sign off for the week?
I like Stock of the Week. Obviously,
Thank
you
you.
are the author of it, so I am tasked with editing that. But I see all of Cabot's content, and Stock of the Week is really approachable. It's a great way to get I don't want to call it a snapshot because it's not frozen in time, but it gives you a good aggregation of the sort of the best performing, the best looking stocks, and a really good takeaway. So definitely something that I would encourage anybody that enjoys this podcast to check out, because Chris comes across as Chris. So it's not like you're going to get an entirely different subscription versus, the way he talks on this podcast. So
Yeah, and I have
highly
no problem.
endorse.
I have no, that's good. I have no problem pumping it up too, because as I said, these are stocks that are pre-approved from all of our other analysts, and they tend to outperform. It's why Stock of the Week outperforms. There's a reason Cabot's been in business for more than 50 years, because our analysts are really good and tend to outperform the market, and our subscribers really like that. So I think you would like Stock of the Week too. cabotwealth.com/street. Thanks everyone for joining us this week. And we will see you back here next week on the latest edition of Street Check.